If you look back, it has been so far a really strong decade for the banking sector for three reasons mainly. So first, you had this profitability uplift after COVID. So banks did the homework last decade, cleaned their balance sheet, did the restructurings, and then interest rates started to rise, so they made more money. That was the profitability going up. Then secondly, once investors realized this is more sustainable, the profitability at a 14% return on tangible equity, they started to re-rate the sector. That started in 24, but this year has been really the year of re-rating. We think both trends can continue once profitability going up, but also the re-rating normally happens when you have ongoing earnings revisions, which we expect. So we're above consensus here. And then the third element, and probably the third leg for the sector performance, is growth. The sector has so far been rather seen as X growth, but whether you look at loan growth, at deposit growth, in particular loan growth is the comeback story for the last 1.5 years. Every month it's getting better. We're at 3%, and this is also something that should help valuations going into 2026.
So you remain bullish as we approach the new year, but when you compare 2026 to 2025, do you think that performance in the new year is going to be as good as similar levels as we have witnessed this year, or is actually perhaps even bigger than what we have witnessed so far?
Yeah, I mean, 25 so far has been really a stellar year in terms of outperformance. We're not calling for that, but we see these three levels actually helping it. When you look at the valuation, we are just a bit above the long-term average at 9.5 times. There were peaks at 12.5 times in 2018, 2017 around that time. We expect a bit more progress towards the double digits with ongoing earnings growth and upgrades here.
I was looking at your top picks for the new year. You have Bank of Ireland, Barclays, Commerzbank, Erste Group, Eurobank and Monte dei Paschi. And some of these banks are in some way, shape or form involved in any sort of potential consolidation here. So I'm trying to understand, as you look at the new year, how do you expect M&A ultimately to play a role here for European banking names?
No, it's a very good question because European banks are well capitalized. Most of them, all of them are in significant excess capital territory. And then it's a question for management team what to do with it. Do you have organic growth opportunities, which are okay and improving, but you are so profitable you can do more? The second leg is then typically capital return, dividends and share buybacks, very frequently used, low execution risk. But the third is inorganic growth. And that is something the sector had been missing for almost a decade. Now you see there's confidence coming back among management teams. You see investors are increasingly supportive, and the deals announced are actually typically earnings accretive, and that's why even the acquirer stock price tends to go up. We would expect more of this activity to happen.